Good morning, afternoon or evening, ladies and gentlemen, all in crypto here, and welcome back, guys, on this terrific Tuesday for what is going to be nothing short of another jam-packed daily market update. We'll perhaps be asking and answering the question, is this the start of a recovery or just a relief rally? And perhaps to kick this daily market up, we'll look at some progression in regards to what is ultimately causing the price action that we're seeing in the markets. And that is the kind of tariff trade war. Now, there's two sides to this. And the market's taking the literal implementation of tariffs and the escalation of them and what that's going to mean for economic growth. That's the one, let's say, scenario one. Scenario two, which is the one I'm more in favor of, is that tariffs will open up a dialogue that may actually result, and I'm in favor for tariffs if they result in this, although I'm not for tariffs, period, a contradictory statement if ever I've made one, that tariffs actually may result in lower tariffs across the board and more of a freer trade and perhaps more economic activity on the back end of all of that. So the market's taking things very literally. We'll look also at a take from Larry Fink, who's taking this all literally and looking at the effects of a literal implementation of what has been set out. There is, however, news on multiple countries and nations like the European Union or conglomerates like the European Union in regards to actually trying to work out a deal. Now, I did listen to Trump's retaliation to a reporter talking about a deal with Europe, a potentially zero tariff, and would they look to reciprocate that? And he kind of stepped around it and almost said, perhaps not, which it's kind of like, come on, dude, you know, we're getting somewhere. This is working. Don't undo it by being overly zealous and looking for reparation. Instead, let's move forwards in a more freer trade fashion. But there's a lot I don't have the answers for. We're just trying to work all this out as cryptocurrency investors. And of course, our market is entirely tied to what's taking place. So we'll be looking at the clip from Scott Bessent, then diving into what BlackRock had to say, or Larry Fink's BlackRock. He makes a good point about manufacturing is already 8% in the US, makes up 8% of the workforce. He essentially said, look, manufacturing isn't a well-paying job. Something like an electrician is, of which they're set to have a shortage of. And here in the UK, electricians are like gold dust. Tradesmen generally are like gold dust. Why aren't we trying to boost that sector for the American people? And why manufacturing, which is a kind of lower paying job? I was shocked to find out how much electricians make on average in the US. It's about 150 grand a year. Which I suppose once they've taxed the hell out of you and you've had to buy food and shelter, et cetera, but, you know, might not stretch as far as it once did. But then we're going to dive into some XRP news. The XRP 2X ETF, which we may look to take part in. I'm already long XRP, of course, as you guys know, and it's doing well for us, has just been released. This is very article into Eric Balanchunas. Also, Ripple's UK Policy Summit took place. We'll look at some highlights from that. The DOJ, Department of Justice, has disbanded their crypto unit following Trump's order. Then we got some news in regards to the executive order that essentially has demanded that federal agencies have to submit their crypto holdings to the Treasury, and then we'll look at the markets. You know, is this just a relief rally or is this the start of a recovery? It's too early to tell. And we said this week was important. Like I said, we don't have all the answers. You guys know I make videos every day for you where we try and help people through these markets and really highlight the opportunity that the cryptocurrency space has to offer. Also have a Patreon, which is a group of people that are all working towards the same endeavors. And despite the peak of the pullback, one of the worst days for the S&P, you know, we were still in the profits at the sort of low of the pullback as an overall portfolio. And actually, I think we're exceptionally well positioned for the enabling of this technology. Remember, there's so many ETFs that are still yet to be issued for the cryptocurrency space. The one question that we're trying to ask and answer is, can crypto survive a recession? My base case is no, because it's moved by the same factors. Let's get into this and let's start things off with a clip of Bessent in relation to progression on the kind of tariff trade war. And this is going with the sort of second scenario that I'm more in favor of.
I can tell you that there are 50, 60, maybe almost 70 countries now who have approached us. So it's going to be a busy April, May, maybe into June. And Japan is a very important military ally. They're a very important economic ally. And the U.S. has a lot of history with them. So I would expect that Japan's going to get priority just because they came forward very quickly, but it's going to be very busy. And if President Trump again gave himself maximum negotiating leverage, and just when he achieved the maximum leverage, he's willing to start talking.
Now, positive signs towards progression. If you look at what's moved the markets, and we'll go over to the S&P for this, it is everything going on with the kind of trade tariff situation. And of course, the cryptocurrency market is just at the behest of it all. And it was interesting. Yesterday, we got a rumor that they might postpone tariffs for 90 days. And the S&P shot up. This was the candle you got on the back end of it, showing you how sensitive to news all of this is. And if you do get any progression, if you look at why the markets have sold off, if you get progression towards a better scenario in regards to all of these tariffs, not a literal implementation and escalation, but a negotiation, I think you might see a real sharp recovery. And actually that recovery could turn into the next sort of phase of this sort of bull market. And the S&P has been in a bull market since we decided to get back into risk assets. January the 5th was our sort of date. You know, now you have invalidated this trend structure. So you could be verging on potentially a deeper correction. So are we in a relief rally or a recovery? The jury is still very much out as far as I'm concerned. There was news in regards to all the tariff stuff. This is von der Leyen. Europe has offered some 0 for 0 tariffs. Trump, unfortunately, so you guys know my stance, and it's a purely objective stance. I'm more for Trump and what he may do and actually enact some real change than a continuation of what Biden and that general regime were enacting, which is continued expansion of government, continued spending and control of government. I'm of the mindset that government should be significantly smaller and that human beings should be more in charge of themselves. Nirvana's not for this world and there's no perfect scenario. But so I'm more for sort of Trump and what he's doing, which is quite unpopular at the moment, I know. And despite that, of course, yesterday when he was asked about European tariffs and 0 for 0 and would they reciprocate that, he kind of said no, maybe not, because they've been sort of taking the mick for a while. And I'm kind of like, I get keeping your cards close to your chest, but at the same time, if they offered 0 tariffs, this has worked. And that second scenario comes into play, and actually what you get is a total reversal on that scenario if tariffs come down ultimately across the board. For the markets and for economic projections than what we have right now. And that's really going to send the markets. And that's still very much my base case. Despite that, Larry Fink talking and really weighing up the situation here as literally as it's been put out thus far without any negotiations. BlackRock CEO Larry Fink, in an interview happening now with Business, says we're going to see more evidence of slowing in the economy in the coming months. He says we are probably in a recession right now. And CEOs he's talking to say that we're already in a recession. He says he will be concerned about inflation going higher if all the proposed tariffs go into place. And that markets could continue down another 20% if the proposed tariffs come in place. We're trying to make this a simple, what is a very complex situation with many different paradigms going on in regards to the markets right now. The Fed is still a big one that we're kind of circumventing for looking at more pressing matters. If tariffs are literally implemented, we're breaking this into 2 scenarios. Literal implementation, an escalation, like what we're seeing out of China, or negotiation. Negotiation, I think, is a good result because it could end up with what we've always said could potentially result in lower tariffs across the board. And I'd very much like to see that. Let's talk a little bit now about some crypto news. This is from Eric Balantunas, the guy to follow when it comes to ETFs, in my opinion, along with James Seyfarth. A 2x XRP ETF is launching tomorrow in the US, the first ever XRP ETF on the market. I'll be looking forward to seeing how that progresses because I'm already long XRP with no leverage because I don't play leverage. If I could buy a spot ETF that gives me 2x exposure, that might be an interesting paradigm. Certainly if I think XRP is going to $19.27, which we still do believe it is. Very odd, maybe at a first. That's a new assets first ETF is leveraged. Spot XRP still not happened, although odds are pretty high. Story via, obviously, Bloomberg Terminal. So yeah, it's very likely you're now seeing leveraged XRP ETFs enabled, it's very likely you're going to get an XRP ETF and crypto more broadly, and they're likely going to go through a whole wave of them. And that's going to unlock a hell of a lot of capital and a whole new buyer to this market. At Ripple's UK Policy Summit, Ripple expressed the opportunity for crypto in the UK and how firms are pushing for the UK to adopt digital assets. Crypto assets are a global opportunity and the UK has a chance to lead. I can't see the UK leading anything except for us into a nightmare unrest situation. That's just my view of the UK right now. I don't want to go too much into that. This isn't a political channel, although it's kind of hard not to express my disappointment with what's taking place here in the UK. But interesting news all the same. This was reported by Alex. He's doing a great job for us. Also, the DOJ disbands crypto unit following Trump's order. The US Department of Justice has disbanded its crypto enforcement unit, effective immediately, following an order from President Trump. This unit was dedicated to investigations related to cryptocurrencies. The decision reflects a change in the DOJ's focus, with future investigations directed towards those causing harm in the digital asset space. They should go back after Gary Gensler. This disbanding of the unit is part of a broader move to reduce regulatory oversight of digital assets under the current administration. So there's a lot of things going on economically with the United States. Oil is coming down for us. That should ultimately, inflation comes down. They're deregulating. They're potentially easing in regards to interest rates and things like this. And, you know, the tariffs, again, are another paradigm. There's multiple things going on with the markets right now. Also, today is the day. This was reported by Cryptos R Us, or reminded us by Cryptos R Us. Shout out to George. Per the executive order, today is the deadline for federal agencies to submit their crypto holdings report to the Treasury Secretary. Going to be interested to see what comes out of this. We'll be reporting on it because, of course, you might end up finding that a lot of the federal agencies and the people within it own crypto, which could be interesting. This is brutal for the S&P. One of the worst days I've seen in the markets in my career, which is quite a long one at this point. You know, this could recover in the same sort of March 2020 style. We need to see that, though. Or it could lead to continuation, and we can't really rest our hat on either for now. Despite that, we've looked at the Bitcoin chart and said this is still a very bullish chart, despite everything going on. You know, one of the largest sell-offs for the S&P in history. And look at crypto. You know, look at some of my holdings like HBAR, XRP. They're still well and truly elevated, and I believe have got an amazing time ahead of us. But we do need to watch the broader markets for that, and of course economic data, because I think my base case is that crypto doesn't do well in a recession, despite us looking at charts like Bitcoin versus the SPY, etc., etc. So hang in there, guys. Another day, another dollar, another day in the cryptocurrency space. We're always very thankful to be here because we think this space is truly going to offer you guys an amazing opportunity, and don't lose sight of that. You know, yesterday we looked at a Rothschild & Co report, their asset management arm. And it really kind of summed up very well, actually, the bullish nature of the space where it currently is. I don't think that's going to exclude it from a recession if one was to take place, or some sort of a disaster. However, it might be a factor that sees a rather quick recovery if that was to happen. Or we look at that second scenario, which is that tariffs don't lead to ruin and there's resolve to them. And we could be looking at the very next leg for this bull market, continuing for risk assets broadly, which they have been in. That's it from me, guys. I'm going to love and leave you on that note. I'll see you all in the next one. Sometimes you need to go down to go up, if you understand that. And I'll see you all in the next one. Thanks for watching, guys. See you soon.